I guess third time is the charm for the aftermarket recap. Good afternoon, everybody. Welcome aboard. It is July 13th on a Wednesday, 2022. Thanks so much for joining me this afternoon. My name is Carlos Garcia, founder and CEO of G.A.R Capital. Let's go ahead and rock and roll and talk about the day. Big difference from where we were, how we were feeling this morning, actually, right after the CPI number. So let's go over the market. Dow fell 208 points. That's off its low this morning. The Nasdaq actually was green, and the S&P was green this afternoon at the highs of the session being around 38.34. We ended at 37.96 on S&P futures. Let's take a look. S&P index closed down 0.45%. Nasdaq did close pretty flat, 0.15%. Volatility index was actually red, 1.72%. Let's take a look at equal weight S&P down 0.56. Small caps flat, down 0.09%. That's pretty interesting to see, even after that really hot CPI number. Bond yields were up today. Bond yields were down today, 2.904% on a 10-year. We had TLT up 1.15%. Gold was up 0.52%. Silver up nearly 1%, with the dollar hitting the peak of around 108.58 today. That's a 20-year high. We actually hit parity and below parity for the euro, meaning $1 was worth more than €1. That's a big level, psychological level for everyone. High yield credit, again, bonds were bid today, but high yield credit kind of was flat. Investment grade bonds caught a bid today, 111.65. So that's the good news in terms of the bond market. The reason the bond market was moving so, I guess, higher in terms of the bond values is we're pricing in a recession now. But now there's talk of a possible 100 basis point hike in July after this hot CPI number. So again, things could change as we go. Every day is a new day. Crude oil up 0.58%, 96.40 a barrel. Gasoline continues to fall 0.36%, $3.25 a gallon. That's off its lows. Taking a look at Bitcoin, even with the hot CPI print, kind of rolling with the Nasdaq, but again, outperforming the Nasdaq, 19,645 on the futures, 1,074 for Ethereum, up 3.57%. And that's even with a kind of a mixed dollar today. When the dollar started sinking back, that's when the market started bouncing. If you can see here in the bottom right-hand corner of the screen, right around the dollar index was tested around 107.47. That's when we kind of got that inverse correlation with S&P futures where we got to around 38.25, 38.30 or so. So again, the dollar's kind of the tail wagging the dog in a sense. Yields are important too, but they're being bid for the wrong reason. Let's just say it's more of a recessionary signal. But even with this hot CPI number, knowing that we're going to get rates to go higher, the 10-year bond fell. We actually had a strong 30-year bond auction today. That's what had rates sink towards the tail end of the session. Again, it's important to know this, guys, because this is really the market. Fixed income, capital markets, bond markets are a lot bigger than the stock market, and that's usually the smart money. So it's important to look at bonds and bond yields. I've gotten a lot of feedback from some of you saying that you use TNX a lot. That's kind of like how you track your bond yield. So very good stuff, man. It's important to be kind of well-rounded to know what's out there and why things move the way they do. Let's go and take a look at S&P futures. I posted this chart on Twitter today. And let's go to the weekly, the 3-year weekly. We just closed slightly below this 38.2 Fibonacci level. If you go ahead and zoom into the S&P futures, here's what we got. 38.40, 1, 2, 3, and now what this is the fourth. I guess you want to call this a quadruple bottom. Unless we think we're going to get a quintuple bottom, which I've never heard of that. Or you can actually say here is going to be a quintuple bottom. We may just break this relatively soon. We do have PPI tomorrow. We do have retail sales tomorrow. So there's a lot more scenarios to play. PPI is expected to be a little better than CPI as corporations can pass the cost to consumers, at least at this juncture. So again, I wouldn't expect a completely high over the number, PPI number, the way CPI is. So again, that could change as we know. And then we have retail sales on Friday. We are now at a point with the Fed that we're looking to see if they pivot. And now Fed fund futures are pricing in not a rate hike, but a rate cut by February 2023. Now that's moved to that from March 2023 to February 2023. So in a sense, you kind of want good news is bad news, because if we have a weaker consumer, we're going to get lower prices. In that turn, we're going to get lower rates and possibly rate cuts. In a weird way, we kind of want that because that's going to boost at least an environment for stocks to at least stabilize and stabilize this inflation. So now we're thinking to ourselves, do we induce this chemotherapy to this cancer patient that is the US economy with this cancer of inflation? Do we give them the chemo regardless of the fact that they're going to get sick, meaning we're going to have a recession? Or you can have it both ways around. Or, hey, we're going to solve this little illness. Again, it's just an analogy. But with that being said, that's what we're really looking at is if we're going to get a Fed pivot. The higher the Fed goes, the more they're going to cut. They're almost like they're adding ammo. Now, that's not just being optimistic. That's just being realistic because the Fed is quick to cut and very slow to rise. If we get 100 basis points rate hike in July, I'd be extremely surprised. I think we're going to get 75 and possibly another 50 in 50 or 75 in September, probably leaning more to September. The only thing now we have to look at is the fact that what are the commodities prices? Are they going to reflect on the CPI in August? We may not have a Fed meeting in August, but we will have a CPI and PPI number in August. Now the question is, did we hit the peak? Now that's the main thing. We already got the number. The number was bad news, but yet the Nasdaq rallied. Yet the S&P rallied. So again, we're getting some kind of bounces here and there. We still haven't gotten that real strong bear market rally as of yet. The best we've gotten is around 10%. But again, if we kind of go back here to the daily, it's still a downward trend, guys. It's kind of still ping-ponging to that level. Really, the level I'm thinking that we're going to get is 4,000, and then we're going to reject back down. 3,500 is still my case to buy stocks. That is the 50% retracement on the 3-year. That's right near the 200-day moving average on the weekly. So that's still my target. I still think we have more room to the downside. The problem is, and what I worry about, is if we may not get a chance to get there. We may just get to 3,600, 3,650. Again, we may just fill this gap here. Take a look at this. We may just fill this gap on the daily and just move on with it, which would be 3,675, a retest, maybe 3,633 in those lows, and then we bounce back up. And again, we don't get that chance at 3,500. But again, we're going to be very fluid and see what's happening, as we go along, especially with this data still coming in. Let's answer some questions. What's up, brother? Thoughts on Zim? Huge yield, big earnings, market cap is low. Okay, Zim integrated shipping. I don't know much about this, but there is a gap to fill the upside. You got a couple of gaps to fill the upside. So at least on a technical basis, you have something to go by. Let's go ahead and bring up Zim stock. I'll bring it up on Google Finance. The problem is the yield's very high, 47%. And as we know with like the names like Voyager, those kind of teaser rates, they kind of scare me. Usually when it's too good to be true, it is. So I wouldn't own it just for the yield. If you just want to trade it, that's fine. I don't know about owning it. I probably wouldn't want to. Hello, what do you think about JEPI? G-J-E-P-I. They deliver a 13% yield by distributing dividends from their holdings as well as call options from large cap stocks. Yeah, I think I've heard of this kind of name before. Some call writing ETFs. So let's go and take a look at it. It's a JP Morgan equity premium ETF. They're just call writing is all. So they can provide that yield. It doesn't say a yield here on my Google Finance. Let me see if I can bring it up through the JP Morgan website. This is an asset management. Let's see if I can find the 30-day yield is about 13.79%. So again, the only thing is the expenses being about 0.35%. But again, very attractive yield. Again, I would trust JP Morgan with that. I wouldn't bet the ranch on it, but it wouldn't be a bad part to put some money into the portfolio for that if you want to go for JEPI. I wouldn't go all in. Canada did rate hike of 100 points, and I'm pretty sure 75% of the following their footsteps. Check futures. Absolutely. The only thing is the bond yields. Again, bond yields wouldn't be falling. Again, the longer end curve is falling, yes, but the shorter end is not. And that's what I'm going to go over today on the video that we're going to have for our investment club today. I did a video earlier. So let me go ahead and get this index yield here. Let's see if I can get an intraday. Okay, here's the yield, and I'll go ahead and compare it to a 10 and a 2. So we'll go to a 5 and a 2. And you could see with a 5-year. We'll go to a 2-year. Let me expand this for you guys. And you could see this is intraday. This is CPI pop, and then we faded, and then we kind of rallied to the upside. These are still inverted, yes. But again, look at the 10-year. The longer end curve is lower. So again, that's telling me that the expectations in terms of inflation is all in the short term, not prolonged. So again, the 2-year is going to give us more of the inflationary reading than the 10, but the 10 still is based for mortgages and MBS. So you're going to have to look at that as well. That's why I look at throughout the whole yield curve. But yes, 100 basis point hike. Bostic did say that today. He's not a non-voting member of the FOMC. He was talking about that, I believe, on Bloomberg today, or was it CNBC, that 100 basis points rate hike isn't out of the question. If you guys remember, in June, we talked about 100 basis points then. So not really new, but again, with a very hot CPI, oh yeah, all options on the table. And the faster we do it, the faster we can. Faster we can move forward. ES levels to watch for the next weeks. What are you expecting for FOMC by the end of the month? FOMC in July, again, I expect 75. I don't think we're going to get 100. Again, I could be wrong, but I think we're going to get 75. 100 will be just ripping off the bandage. Right here, 3740 has been that level that we keep bouncing off of. There is a gap to fill in SPX to the downside. If you break 3740, here's the level you're going to. It's 3675 or around 3680 on S&P futures due to that gap to fill into the downside. We also have gaps to fill to the upside. So again, we'll see PPI, we'll see retail sales. If we stay in this range, it's going to be a difficult one to trade. We need to get some kind of momentum up or down. But all we've done is retest near 3750 and then bounce again, kind of hugging to that 200-day on the 1 hour. Do you think Elon dropping the Twitter deal makes Tesla bullish? If he wins, yes, because all his wealth is tied to Tesla itself. So remember, if he needs to raise capital, that $1 billion breakup fee, he has to sell Tesla shares, which again brings down the price. Thoughts on possible market reaction of a 75, 100 basis point hike? I don't know if that's priced. It's not priced in the short end, 100. I think it's priced in for a 75. The long end is pricing in lower inflation anyways. Hence, we're getting the inversion of the yield curve. But if we get a 100 basis point hike, again, in a different kind of context, because if we have strong retail sales, then you can cut the 100 basis point. If they don't have we have soft retail sales and softer earnings as we get the banks coming to report, that may just put us to 75 instead, or maybe 50. Again, very unlikely, but 75 is really, to me, based on the retail sales. Because if the consumer is weakening and we're still getting high inflation, that's where the Fed is going to have to make a very big decision really quickly. What about the consumer report on Friday? That will be the retail sales. Again, we're going to wait and see if we get a low number. If we get a worse than expected number that shows that the consumer is weakening, that'll kind of give us a little bit of a backdrop for upcoming earnings. And then we'll get EPS slashed, and then more than likely, and then we'll get lower. So, hey, 37.40, that level breaks, you're going to get to that gap fill 36.75 at the minimum. Thoughts on the Google stock split? That's on the 15th. Again, just like Amazon, I think Google's a great company. The word is that they're going to split their ad business and they're going to split another business. That's just a rumor, but nothing has been come to fruition. Google was actually down today, one of the bigger laggards. And let's see here. We have one more. You're very welcome. And let's see here. I think the ticker symbol is ZQ. Oh, I think you're talking about the Canadian futures. Where do I have this? Where is that thing? Okay, I thought I had. Here we go. Here it is. We're looking at. Let me see if I can find it. Is it ZQ? I don't know if that's a futures ticker. I don't have that for anything. Nope, not on Bloomberg anyways. Not the ZQ. Sorry, man. What is the best time frame to look for an inverse or head and shoulder pattern? Depends on what you're trading. If you're looking for a longer term move, you're looking at the daily or the weekly, more likely the daily. If you're looking for a shorter term trade, options or futures, you want to go hourly. Thanks for the questions, guys. Have a great rest of your evening. I got the Investment Club video here at 7 p.m. Discord members, make sure to check the Discord server. We'll send the link out. It'll be on Zoom. It'll be a screen sharing, and we're going to go over all the Bloomberg stuff together. So, and answer some of your questions. The Investment Club video was already posted. It was an hour long. It was great to do, very in-depth. I hope you guys enjoyed it. We'll leave it there. Have a great rest of your afternoon. See you guys later.